Hey guys, Uncle Ray. Welcome to another episode of the Crypto Bellwether. I got an exciting trade that I want to share with you. Now, this is just my strategy. It's not financial advice, but I just want to let you take a look at what I'm looking to do and how I'm going to enter the market. And if nothing else, watch this and you can use it as a learning exercise. Now, I'm not a financial advisor, but this is my strategy. Now, we're looking at Chainlink. Now, I'm not going to get into the fundamentals. There's a video in the playlist if you want to check that out. However, these trades that I put on do not work if you don't have strong fundamentals. See, this is why I get really excited when I see a crypto go from high of 52 down to 20. Why do I get excited? Because if you study the market like I do and you watch the history of the majority of the cryptos, whether it's Solana or Ethereum or Bitcoin, it doesn't matter. They have somewhat of a similar pattern. So, their Chainlink had just found its footing like a year ago and it had a substantial rally. Well, people that get in way down in here, way down in here, they have a substantial profit. The stakers, substantial profit, so they take it. And then it kind of falls apart, which is normal, especially when it follows Bitcoin and the rest of the market. But here's the good news. To get in really early is hard. But what we know now is that Chainlink has really good, strong fundamentals. So it should take a run back and break this high sometime this year when Bitcoin and the rest of the market starts to move. Now, if Bitcoin runs to 100, in my opinion, that should easily take out the 52. So let's look at the risk reward. You're already at 20. So if you just buy right here at 20, that's basically 2x to get back to 52, right? So that's a pretty good risk reward. Now, that being said, once it starts to hit and breaks through that resistance, the odds are it's going to go much higher. Depends on what's going on in the market. So let's take a look at this thought process. Now, we could do it one of two ways. You could do it as a short-term trade, or you can just do it as a long-term trade or a longer trade. It's up to you. But again, the reason this works, or that I feel comfortable, is that it has solid fundamentals, and I believe it's going to be around a long, long time. So let's take a look. Right now, this thing has came down pretty aggressively. It's already at 20. It's probably going to test that support, and it might break if we have a little luck. It'll break this support. The stock market's down, Bitcoin's down, everything's down today. It's the 20th. So let's say we watch the 1 minute chart and we're going to get in somewhere around 20. My suggestion is, and my strategy would be, go ahead and watch it. So let's just say it's just going to trade sideways and it holds that support. So we're in at, say, 20. Well, we go in with about half the position, 50% of the position. Now, if it runs, you wake up tomorrow and it runs, just let it run. I'm not going to chase it. Now, if you wake up tomorrow, for instance, and it's down here at 15, 16, 17, allocate the other 25%. If it falls apart or something really starts to happen, like with the stock market, and it looks like it's getting worse and worse, then just watch it and then put that last 25% to work. Now, here's the trade. By the time it gets back up and starts to test this resistance, that's pretty good trade if you just want to take the profits and get out. What I would suggest is if it starts to test this resistance, go ahead and sell out like the 50%, depending on your comfort zone and how much risk you want and how long you want to do something. So, or you could just sell out. But what I like to do normally, if it has a good run, depending on how I feel and if I think it's going to go here and test that, uh, I go ahead and take maybe 25% or 50%, depending on how I feel. But then I'll let at least 25% ride no matter what. Because if you've caught it down in here and you've made that good a trade and you can get out of 50% or 75% of your position, there's no reason to get out and not see where it's going. But like I said, I always do that as we go because I have a plan of what I want to do. But in this environment, with everything trading sideways and all the regulation and the SEC and the Fed, I kind of got to play it by ear once it starts to run. Because my question I want to ask myself is, when it breaks this right here, is it running or it's just retracing this big move right here down? Because this is pretty substantial in a short period of time. So anyway, that's kind of my strategy. Like I said, it only works if you have good fundamentals, because if you don't have a crypto with good fundamentals, it won't come back. It it was like a pump and dump type scam, or not really going to call it a scam, but it was, a coin that didn't have real utility. It had, maybe a VC behind it or a lot, just a good story, but it doesn't have real world need. It doesn't solve a problem. Chainlink solves a problem. So if Web3 is going to be around and the metaverse is going to be around and all that good stuff, which I 100% believe, very, very bullish, Chainlink is going to be a part of it. So there's no reason to think that this is Chainlink's high. It should take that out. And I think it's going to take it out this year, barring nothing crazy with the government and all the regulations and stuff. Anyway, guys, that's all I got for you. Next time I'll try to make it a little more brief. If you haven't subscribed, please do so. And make sure you smash that notification bell, because I'm going to do a lot more trading. And I want you to get the alerts because they're time sensitive. And also hit that like button. We're trying to grow this community. We need your help. Leave some questions and comments and share with like-minded people. Now remember, not financial advice. Take care, guys.